Well, the effectiveness of risk profiling has become rather topical lately. Patrick Barker, who's private client portfolio manager at Cannon Asset Managers, is in Durban, where we don't have a studio, unfortunately. But of course, we have many of South Africa's brightest people. So, Patrick, nice to have you on the telephone line to us. Just for those who aren't familiar with what risk profiling is all about, how about giving us a thumbnail sketch?
Great. Thank you for interviewing me, Alec. Just briefly, risk profiling is designed to try and establish the risk tolerance of an investor. And generally, a questionnaire is used for it. And included in that questionnaire is a fair amount of psychology. And that really is probably the briefest summary in terms of it.
So why is it applied, or why has it become so topical?
At the moment, the marketplace is viewing risk profiling as a dubious measure to measure tolerance. There are two schools of thought. The first school of thought is saying you should actually sit with an investor, establish what their needs are, and from there, you should actually be telling them what risk profile need to invest in. So, for example, if their needs are that they have to produce 15% per annum to reach their goals, that would probably be an aggressive investor, and you need to say to the investor, that's the profile you have to have, and then you asset allocate according to that. The second school of thought is saying rather use the risk profile questionnaire because you're going to establish psychology of that investor, as well as establishing what sort of asset allocation they need. And then you can work with the investor when they start having a wobble about the asset allocation you've chosen.
So it's more a question of finding out from the questionnaire what that person's risk profile actually is, rather than telling them what it should be.
Yes, it is. And, I think the view that you have to take is probably to apply both. If you have an investor who needs 20% per annum in terms of their needs, their current assets, their future aspirations, but they actually come out moderately conservative in their risk profile, well, those two probably don't go together. And the questionnaire will help to establish that. I'm not saying that questionnaires are the be-all and end-all, and I think they really need to be worked on. But the bottom line is we need to establish that client psychology.
Fascinating insights there on risk profiling from Patrick Barker. He's the private client portfolio manager at Cannon Asset Managers.